In this video, we will hear from economist, American lawyer, investment banker, speaker, and best-selling author, Jim Rickards. Jim Rickards has held senior positions at Citibank and has testified before the U.S. House Science Subcommittee on Oversight about the risks and dangers of financial modeling and the 2008 financial crisis.
The global economy is weakening very quickly. That's backed up by a lot of metrics. Financial markets can come up with their own narratives and go their own way, at least for a while. So you have to, they're not in sync. They will be in sync eventually, but not always right away. A lot of times the financial markets get ahead of themselves and then they wake up to reality and they, crash, correct down. So there's a little bit of that going on. But in terms of the global economy, our economy, so we had negative growth in the first quarter and the second quarter of 2022. Two back-to-back quarters of declining GDP meets the kind of rule of thumb definition of a recession. Nobody wants to use the R word. They're all hiding behind the National Bureau of Economic Research, which is the official arbiter of recessions and recoveries. We'll see what they say. Typically, the National Bureau of Economic Research declares a recession, the beginning of a recession, after it's already over. It's like, thanks, we've been through it. Thanks for letting us know we just had a recession. And I wouldn't put any weight on a low unemployment rate. It ignores labor force participation rate, which is awful. It's down around 62% versus 70% in the year 2000. But beyond that, unemployment is a lagging indicator. Unemployment goes up after a recession begins. Employers are very reluctant to lay off employees. You got to pay severance. It's expensive to recruit and hire them back and train them. So you pretty much wait until the recession has already started and you think, all right, I got to lay some people off. So it's not a leading indicator, it's a lagging indicator. So the Fed is behind the curve. The biggest, the real, 500-pound gorilla in the room, if you want to call it that, is there's a brewing global liquidity crisis, a global financial crisis that's different from a recession. It's financial panics and recessions are two different things. They can come separately. In 1998, we had a financial panic, but there was no recession. In 1990, we had a recession, but there was no financial panic. In 2008, we had both. They can come together. It looks like they might be coming together again. This is revealed in inverted yield curves. Each bailout gets bigger than the one before. Each crisis is more dangerous than the one before. So 1998, 2008, we're going to get to a point, we may be there, where the crisis is actually bigger than the Fed, bigger than the Fed's ability to stop. Well, you want assets that are going to be immune from a global liquidity crisis. What are they? Land, real estate, gold, silver. Gold, I always recommend a 10% slice. And, I talk about gold a lot because it's a form of money, and I do the monetary analysis. I do invest in gold mines, but I don't hold myself out as a geologist, but I do think about it from a monetary perspective. And then people always say, Jim, what about silver? What about silver? I'm like, look, if gold soars the way I expect, silver's along for the ride. There's not going to be a world of $3,000 gold and $20 silver. That world doesn't exist. If gold's at 3,000, silver's going to be pushing 100. So without giving an exact forecast, silver will be along for the ride, but silver is going to do fine. And I do think it's extremely practical because in a world of CBDCs, silver will be a form of spending money. Gold, even the 8-gram coin I mentioned, the quarter ounce American Gold Eagle, still $500. It's like pulling a $500 bill out of your wallet. It's a lot for groceries.
Right. So think of the gold more sort of the store of value, and silver more as the currency.
Yeah, but the quarter ounce, maybe 10 of them gets you a new car or something. A regular stock portfolio is not a good one, and banks are going to be in distress. Money market funds are going to be in distress. That's what a liquidity crisis is.
Any wise, experienced investor will tell you preparation is key. If you are interested in protecting and preserving your wealth with physical, precious metals such as gold and silver, whether in the form of private investments or a gold IRA, see the links in the video description to see the best gold IRA and precious metal investment companies that we have personally researched and vetted. On the subject of strategy, I will leave you with one of my favorite and often used quotes from the Hall of Fame and professional hockey player Wayne Gretzky. I skate to where the puck is going to be, not to where it was. Thanks for watching.